Welcome to Spidell's California Minute. I'm your host, Catherine Zidane. This week we're discussing the use of loan-out corporations, which are in the crosshairs of the EDD for AB5 purposes. We'll be covering this topic in greater detail in the July issue of Spidell's California Tax Letter. For details on this monthly subscription, go to caltax.com and click Publications. Cast and Crew, a payroll company serving clients in the entertainment industry, recently announced that a client's former employee's claim for unemployment benefits has triggered an EDD audit of over 2,000 of its loan-out company payees. Since California's enactment of the ABC test by AB5, Spidell has been concerned that the EDD and other tax and labor agencies would no longer recognize loan-out corporations and would treat the owners of the loan-out corporation as employees of the hiring entity and not just an employee of the loan-out corporation. Since AB5's enactment, the EDD and other state agencies remained silent on this issue until now. Cast and Crew claimed that the EDD had announced that it will refuse to recognize the use of loan-out corporations. After entertainment and tax industry inquiries were made following Cast and Crew's announcement, the EDD clarified that it, quote, is not taking action to ban these companies in California, end quote. Unfortunately, the EDD failed to provide any real guidance as to how owners of the loan-out corporations can qualify to be treated as employees of the loan-out corporation and not the employee of the business that contracts with the loan-out corporation. A loan-out corporation is a corporation that is typically owned by an athlete, musician, actor, director, writer, or others in the sports and entertainment industries. Athletic teams and/or production companies negotiate a contract to lease the entertainer or athlete to the athletic team or production company. This enables the entity to pay out wages in a predictable manner, allowing the athlete or entertainer to have more predictable income during leaner years. It also allows the corporation to write off expenses like commissions, legal fees, payroll taxes, etc., that individuals are currently unable to deduct due to the current suspension of unreimbursed employee expenses. Using a loan-out corporation also enables the owners to have more money paid directly into a retirement account by the corporation without being taxed until withdrawn, rather than being subject to lower individual contribution limits and subjecting the income to immediate taxation. And a loan-out corporation provides additional liability protection. Under the ABC test enacted by AB5, most workers hired by a hiring entity are considered employees of the hiring entity rather than independent contractors, unless a specific exemption applies. The classification as employee applies even if the worker performs the work through their sole proprietorship or other business entity, including a corporation. In most cases involving a loan-out corporation, the worker, who is the owner of the corporation, would be classified as an employee under the ABC test because they would not be free of the control and direction of the hiring entity, which is the A part of the ABC test, and they're performing work that is part of the usual course of the hiring entity's business, like sports and entertainment, which is the B part of the ABC test. So the big question is, do any exemptions from the ABC test apply? After AB5's passage, many industries successfully lobbied for exemptions from the ABC test, including the music industry and certain performing artists. However, there were no specific exemptions enacted for athletes or for most workers involved in the entertainment industry other than the music industry. Some commentators have mentioned that certain loan-out corporations may qualify for the business-to-business exemption and/or the professional services exemption. However, as the law is now written, these exemptions are probably not going to apply in many, if not most, situations involving the entertainment industry. It appears that in the Cast and Crew audit, the EDD is asserting that the workers are employees and don't qualify for any exemption from the ABC test. However, the EDD cannot comment on these audits, so it's unclear what their position actually is. The EDD has indicated that they're working with industry representatives, so we'll have to see what further guidance, if any, may be issued. In the interim, we recommend that taxpayers using loan-out corporations contact an employment attorney to review their situation before the EDD does. Spidell's Federal and California Tax Update will get you updated on everything that happened during the year, and there are live webinar and in-person seminar options available. Go to caltax.com for details. That's all for this week. Join us next time for another episode of Spidell's California Minute.